Hi, my name's Eb. I'm the founder of Smart with Money Planning, SWM Planning. And today we are going to talk about how to legally pay less tax to the government. So, number one, you can pay as much as you can afford into your own 401k, 403b, etc., your retirement plan, right? The limit is 18,500. I know that is a lot for most people, myself included. So you don't have to pay necessarily 18,500, but pay the max, right, that you can afford. So, for example, if you make 50,000 and you pay 10,000 into your own retirement plan, now you're only going to start paying taxes top line on $40,000, and then of course other deductions. On top of that, you can contribute to your own IRA. Now, this is a traditional IRA that allows you to take the tax deduction that same year. You will pay taxes later, but you can cross that bridge when you get to it. The limit for the traditional IRA is $5,500. So the total amount that you could theoretically reduce your taxes by is $24,000. That is 18,500 from the 401k plus 5,500 for the IRA. So max out those retirement plans. If you forget everything I said, max out those retirement plans. Number two, if you have an HSA offered at your job with a high deductible health plan, a qualified high deductible health plan, use it, max it out. That is a great benefit. You get to reduce your taxes another $6,900. So if you're living at home, or maybe you just have a lot of discretionary income because your spouse makes a lot of money or something, who knows? Uh, But you can just exclude. Right now we're looking at almost $32,000, and when you add the retirement max and the HSA max from taxes, which is a huge benefit. Number three, donate to a charity you believe in. This has one of the highest limits of what you can donate, the amount you can donate to shield from taxes. It works a little differently than the other two because this comes off as an itemized deduction. Um, but anyway, you can, in theory, donate up to 60% of your adjusted gross income. And you can include it on your itemized deductions, which is a gigantic amount, right? It used to be 50%, which is still a lot. I mean, how many people really donate 50% of their income to a charity? But yeah, these are the laws. The government uses tax law to encourage individuals to do things that are good for the economy, like people investing in their own retirement, like people investing in their own healthcare expenses, and like people investing, or excuse me, donating to legitimate charities. So when I say legitimate, the government's definition of a charity that is legitimate, or for tax purposes at least, is a 501c3 charity. So you should get a letter with your donation just to have backup evidence that you really donated. If the IRS comes knocking, right? You don't mess with the IRS. So, number four, start a business. There are all kinds of tax write-offs. Let's say you have a side consultancy. You got your normal job, and then you got your little side hustle, right? But you're a consultant. You know a lot about a specific area. You put up a website. That $500 is tax deductible. You got your marketing, $200 there, tax deductible. You got your office, tax deductible. Your equipment, your new computer to do more stuff, tax deductible. Your miles to meet with people, your meals to meet with people, all business related, tax deductible. Your travel on a plane, of course, to meet with people, tax deductible. There are so many tax deductions for business owners. It's ridiculous. Your clothes that you bought to present yourself professionally. I got the dress down, maybe the kind of Steve Jobs look, well, when it's hot outside with the black V-neck. But Anyway, I am a CPA and I have suits and stuff, but dressed down today. But I can write those suits off as tax deductions what I spend for them. But start a business. So just to keep pace, we got max out your retirement plans, use your HSA, donate to a 501c3 charity, start a business. Number five is own a home. Why should you own a home? You should own a home because you get the mortgage interest deduction. If you get your $100,000 loan, or let's say $200,000 loan, whatever your mortgage interest is, tax deduction, right? Real estate property taxes, those are capped, but I think 10,000 now. It wasn't capped there before. That's a new tax law change, but you got your real estate property taxes, tax deduction, right? You got your home equity loans. So if you decide to use the equity that you built up in that home, hopefully some years down the line, the interest on that home equity loan tax deductible. Also, say you want to remodel your home, look up what energy efficient upgrades you can get. You put in some new, who knows, furnace or things like that. You get a couple $100 in tax deductions, but they change every year and they're real specific. So I'm not going to go into the nuts and bolts of that. But own a home, there's a plethora of tax deductions. And number six is a bonus. This is a more of a state tax deduction and not a federal tax deduction, but use a 529 plan for your children's education. So this is another tax law change. Before, a 529 plan used to only be reserved for college expenses, but now the Trump administration, I believe, uh, Tax Cuts and Job Act, it allows you to use that money for private school, even grade school, middle school for your kid. So there's more flexibility with the 529 plan. And the max you can put in there is 15,000. So quick recap, max out your retirement plan. 401k up to 18,500, IRA up to 5,500. Use your HSA, you can put up to 6,900 in there. You donate to charity, that is a huge limit, 60% of AGI, adjusted gross income. And number four, start a business. Let's say you make 50,000 from your normal job, and in your first year in business, like most business owners, you didn't get a lot of clients as you will down the line. So you made a loss. $5,000 you spent more in business expenses than you actually earned. Well, now you only pay taxes on 45,000 minus, of course, other deductions. And then number five, own a home, bunch of tax deductions there. And number six, on the state tax deduction side, you can max out your 529 plan or just donate as much as you can. Of course, you want to do your best to keep records of all of this. A lot of the companies will have the records online, the financial institutions where you put your investments with, they'll send you a statement. But for the other things like donating to charity, make sure you get your backup documentation. Starting a business, keep your bank statements, receipts would be ideal also for expenses. Owning a home, they'll send you all those statements for those things. But if you buy energy efficient appliances, keep those receipts. And of course, 529 plan is through a financial institution. They'll store the documents, they'll mail it to you. My name's EB. Like, subscribe for more financial tips. I just taught you how to legally pay less taxes to the government. All right, my information's in the description, and have a great day.